Peace and love, everybody. This is Young Nas from iGotOptions LLC, and in this video I want to talk about what extended hours trading is. Before the stock market opens and after the stock market closes, it is possible to trade the stock market still for a certain period of time. That's what extended hours trading means. You have more time to trade the stock market. Now, although it does sound cool and beneficial in hindsight, this is actually a very risky thing to do when it comes to trading extended hours. And the reason is because of two things. One is volatility, and two is less liquidity. Liquidity, just a quick refresher, is how easily you can get in and out of a stock without it affecting the stock price. So if I buy 100 shares of Nike shouldn't go crazy just because I bought it, right? That's an example of low liquidity. There's gonna be a lot of volatility, right? Because sometimes people try to trade extended hours, especially when earnings come, or if there's bad news, like a CEO is stepping down from a stock, right? They may try to play around with certain stocks and hopefully see profit, right? However, that's very risky, and I would not recommend to do that at all. I would just recommend staying away from extended hours because you don't need to trade extended hours anyway to make the profit that you're looking for. And this doesn't apply to options. This only applies to buying shares, right? So at 4 p.m. when the stock market closes, you cannot buy any more options of any stocks. You have to wait until 9:30 anyway, right? Now with shares only applies to extended hours trading, right? So you can only buy shares or you can only sell shares of a stock after the stock market closes or before the stock market opens, right? So extended hours only applies to shares.